Hello everyone, John AG here. Welcome back to my channel Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, the real market updates that everyone cannot tell you. So please subscribe to this channel, and I love you all, my subscribers, for your relentless support. And please, I urge you, watch this video till the very end, because YouTube will not push my videos to more people. The algorithms do not want this kind of unfiltered truth reaching the masses. What if I told you that the financial safety net you have relied upon your entire life has already been dismantled? We are standing on the precipice of a monumental paradigm shift. The date is June 1st, 2026. If you have been paying attention to the frantic whispers in the sovereign bond markets, the quiet panic rippling through the commodities sector, and the shifting tectonic plates of global geopolitics, you already know that something massive is brewing in the shadows. We are here today to discuss a financial shockwave that is scheduled to hit the global economic system starting next week. The gold and silver markets are about to shock the world, and the window to prepare is violently slamming shut. This is not sensationalism. This is a mathematical certainty, backed by historical precedent and driven by a deeply human reality. I'm going to walk you through the undeniable macroeconomic data, the geopolitical nightmares currently unfolding across the Middle East, the shifting monetary policies of the Federal Reserve under Chair Kevin Warsh, and precisely why the world's most powerful financial institutions are quietly hoarding physical precious metals while the mainstream media intentionally distracts the public. Grab a notebook, silence your phone, and let us dive into the harsh, undeniable reality of the 2026 global economy. The illusion of normalcy and the invisible tax. To truly grasp what is about to happen to physical gold and silver, we must first pull back the curtain on the deeply fractured world we are currently living in. The global economy is trapped in a vice grip between two massive colliding forces: entrenched multipolar geopolitical warfare and sticky structural stagflation. For the average family, this is not merely an abstract economic statistic. It is a daily, suffocating tragedy. We are watching the working class and the middle class be systematically hollowed out by the most insidious, invisible tax ever devised by central planners: inflation. Look at your own life. Energy bills are skyrocketing. A trip to the grocery store feels like a luxury purchase. The fundamental dream of financial stability, of leaving something better for your children, is slipping through the fingers of millions. Inflation is the mechanism by which governments quietly transfer wealth from the laboring middle class to the state, entirely bypassing the voting booth. While the masses are forced to focus on how to afford their next tank of gas or how to keep the lights on, the global elite are looking at the macro data. And the data is terrifying. The bond markets have sharply and violently repriced Federal Reserve expectations. Right now, the market is pricing in a massive 60% probability of absolutely zero rate cuts for the entirety of 2026. This realization was reinforced by the blistering, undeniable 6% annualized producer price index data we saw just weeks ago. The era of transitory inflation is dead. We have entered an era of structural, unavoidable stagflation. And in a world defined by stagflation, intelligent capital looks for exactly one thing: an indestructible escape hatch. Have you ever wondered why central banks do not hold Bitcoin or tech stocks in their deepest vaults? Let us talk about the ultimate escape hatch, the king of metals. As of this very week, spot gold is holding strong and consolidating between $4,450 and $4,600 per ounce. Just a few short years ago, mainstream financial analysts and cable news anchors laughed at the mere concept of $4,000 gold. They called it a barbarous relic. Today, it is our undeniable reality. But why is gold commanding such an astronomical premium, and why is this just the absolute floor of the market? It is not just about consumer inflation. It is about the fundamental, global unwinding of trust in Western sovereign debt. Central banks across the globe, spearheaded by the BRICS nations, Brazil, Russia, India, China, South Africa, and their heavily armed new partners, have been hoarding physical gold at a pace that humanity has not witnessed since the collapse of the Bretton Woods system in 1971. The de-dollarization engine. Sovereign nations are aggressively and unapologetically settling bilateral trade in their local currencies, actively bypassing the United States dollar. But to back those local currencies and foster trust, they require a neutral, uncancelable, universally recognized reserve asset. That asset is, and always has been, physical gold. The geopolitical risk premium. With military officials deeply worried about the longevity of the Iranian nuclear memorandum of understanding and allied nations paralyzed by regional instability, massive sovereign wealth funds are urgently stripping counterparty risk from their portfolios. They are dumping paper assets and pivoting hard to physical bullion. The sovereign debt spiral. The US public debt is soaring at an exponential, terrifying trajectory. The interest expense alone is now consuming an unprecedented, historic percentage of total tax revenues. The Federal Reserve knows, despite their aggressive posturing, that they simply cannot keep interest rates elevated forever without completely breaking the United States Treasury market. When you peer beneath the surface and look at the paper futures market, money managers have actually decreased their incredibly bullish bets recently. This means the speculative, highly leveraged froth has been blown off the top of the market. The current price floor of $4,500 is not built on margin debt or Wall Street speculation. It is built on pure, unadulterated, desperate physical demand from the most powerful entities on planet Earth. The silver paradox, the awakening of the industrial beast. But if gold is the heavy anchor of wealth preservation for governments, silver is the explosive rocket fuel for the educated, everyday investor. If you want to see where the true, earth-shattering shock is going to happen next week, you must focus your attention entirely on silver. Let us rewind the clock just a few months. In January 2026, silver went on a historic, violent, and magnificent tear, reaching an all-time high of $121.64 per ounce. It was an absolute frenzy. It was driven by a perfect storm of retail short squeezes, a perceived easing cycle from central banks, and massive, unchecked industrial panic. But markets must breathe. They expand and they contract. Throughout February and March, silver gave the majority of those gains back, consolidating heavily as the paper market manipulators stepped in to cool the engines. Today, silver is oscillating quietly between $75 and $80 per ounce. To the untrained eye, to the novice investor, this looks like a massive crash. To the educated, battle-tested investor, this is the most lucrative, tightly coiled spring in modern financial history. Here is the secret metric the financial institutions pray you never learn about: the gold to silver ratio. Entering this month of May 2026, the ratio was sitting at a highly elevated 62-1. This means it took 62 ounces of silver to buy one single ounce of gold. Then, just weeks ago, the United States and China announced a highly publicized 90-day tariff reduction truce. What happened next was utterly astonishing. The ratio compressed violently to roughly 55-1 in a single week. This was one of the fastest, most aggressive pricing moves we have seen in a decade. Why does this matter so much? Because a compressing ratio mathematically proves that silver is drastically outperforming gold. It proves that the market is finally waking up to the fact that silver is trading heavily on its industrial fundamentals, no longer just riding the coattails of gold's safe haven status. The green energy vacuum. We are currently witnessing an absolute, undeniable supply gap in the physical silver market. This is entirely due to the aggressive global scaling of solar panel production and the mandated transition to electric vehicles. The world simply does not possess enough silver to meet the green energy mandates set by global governments. The artificial intelligence demand shock. As the AI revolution demands immense, unprecedented power grid expansions, and solid-state batteries require highly conductive materials to function, the industrial demand for silver is entirely outstripping global mining supply. Mining yields in Mexico and Peru are plummeting. The earth is simply not yielding the metal fast enough. The historical undervaluation. Even at $75 per ounce with a ratio of 55-1, silver remains historically laughably cheap relative to gold. When you consider that silver comes out of the ground at a ratio of roughly 8-1 compared to gold, you begin to realize the magnitude of the pricing anomaly we are currently experiencing. Silver is a highly schizophrenic metal. It possesses an industrial personality and a monetary personality. For years, these two forces have fought each other. But when both of those personalities align, when critical industrial shortages collide head-on with global monetary panic, the resulting price action becomes nothing short of explosive. The catalyst. Why next week changes the financial world forever. You might be asking yourself right now, John, I understand the macro picture. I understand the debt. But why next week? Why is this a shock that is happening right now? Next week, the global financial markets are going to be violently struck by a perfect, unavoidable storm of macroeconomic data and geopolitical deadlines. These events will dictate the definitive direction of global capital flows for the rest of 2026, and quite frankly, for the rest of the decade. Catalyst number 1, the Federal Reserve's trap. We are entering the immediate, high-stakes runway for the June FOMC meeting. But this is not just another standard meeting. This includes the highly anticipated, heavily scrutinized dot plot projections. This will be the first major signaling mechanism under the incoming Fed Chair, Kevin Warsh. The market is absolutely desperate to know if the Fed will maintain its hawkish, economy-crushing stance, or if they will quietly admit that the banking system is fundamentally breaking under the weight of higher interest rates. Next week, preliminary data regarding wholesale inventories and consumer confidence will hit the wire. If these numbers show a severe, undeniable crack in the foundation of the US economy, bond yields will plunge instantly, and when bond yields plunge, precious metals will ignite like a powder keg. Catalyst number 2, the fragile tariff truce. The 90-day tariff reduction truce between the US and China, the very event that drove silver's recent massive ratio compression, is inherently fragile. Next week, high-level diplomatic channels are expected to issue their preliminary reports on trade compliance. The industrial sector is watching this with bated breath. If there is even a singular hint, a whisper, that this truce is unraveling, the industrial giants who shorted silver to hedge their supply chains will rush to cover their positions. This will trigger a massive, unavoidable physical supply squeeze that the COMEX paper market will be powerless to stop. Catalyst number 3, the Middle East powder keg. The 60-day preliminary understanding between Western powers and Iran regarding safe passage through the Strait of Hormuz will face its first major critical compliance tests next week. We are talking about the vascular system of global energy. If traffic normalization through the strait faces even a minor hiccup, crude oil prices will spike violently. When oil spikes, forward inflation expectations spike. And when inflation expectations spike, institutional capital flees equities and floods directly into the only reliable life rafts available: physical gold and silver. Furthermore, the CME Group recently made a quiet but monumental move. They significantly lowered the initial margins required on gold and silver futures contracts. Margins for gold futures decreased to 5% and silver dropped to a mere 10%. This reduction in margin requirements essentially allows massive institutional traders to take significantly larger positions with vastly less collateral. It is the financial equivalent of pouring jet fuel on dry timber just moments before a lightning storm strikes. The AI illusion and the death of the 60/40 portfolio. We cannot possibly discuss the realities of the 2026 economy without dragging the elephant into the center of the room: artificial intelligence. For the past 3 years, the narrative relentlessly peddled by Wall Street and the financial media was that AI would act as a magical elixir. They claimed it would create such massive, unprecedented productivity gains that it would naturally suppress global inflation. The utopian idea was that AI would make supply chains perfectly efficient and human labor virtually free, allowing central banks to slash interest rates back to zero so we could all return to the debt-fueled, roaring bull markets of the 2000s. That narrative is now officially dead. The latest, sobering data from the World Economic Forum confirms what critical thinkers have known for months. While AI optimism remains sky-high in the tech sector, the actual, tangible productivity gains are being severely and systematically delayed in the foundational sectors of human survival: engineering, heavy construction, public utilities, and frontline healthcare. Instead of receiving a wave of deflationary productivity, the global economy is being slammed by a massive wave of inflationary capital expenditures. Trillions upon trillions of dollars are being desperately poured into constructing massive AI data centers. These sprawling complexes require unfathomable amounts of baseload electricity, thousands of tons of copper, and, crucially, massive industrial quantities of highly conductive silver. Simultaneously, traditional investment strategies are failing the middle class. The classic 60/40 portfolio, allocating 60% of your wealth to stocks and 40% to bonds, is fundamentally, mathematically broken in an environment where both equities and debt are positively correlated to downside inflation shocks. When inflation runs hot, equities fall because corporate profit margins are viciously squeezed by rising input costs. At the exact same time, bonds fall because interest rates are forced higher to combat the very same inflation. So, ask yourself this critical question: where does the capital go when both stocks and bonds are bleeding? It flows directly, urgently, and heavily into real, tangible, immutable assets. The smart money, the multi-generational family offices, the sovereign wealth funds of the East, the elite hedge fund titans, they are already positioned. They have built their arcs. They desperately want you to remain invested in rapidly depreciating fiat currency and wildly overvalued speculative tech stocks, while they quietly and methodically drain the world's physical bullion vaults. The deeply human cost of economic ignorance. Behind every single one of these charts, beneath every ratio, and woven through all these geopolitical maneuverings, there is a deeply profound, beating human story. I started the Aurex channel because I was absolutely sick and tired of watching honest, hardworking people get obliterated by monetary policies they had zero hand in creating. I look around my local community here in Gauteng, South Africa, and I see the exact same pain globally when I talk to my subscribers tuning in from London, from New York, from Mumbai, from Sydney. People are universally exhausted. You wake up early, you commute, you work 40 hours a week, sometimes 60 or 80, sacrificing your time with your children and your spouses. And for what? Only to realize at the end of the month that the actual purchasing power of your hard-earned paycheck has been secretly, invisibly stolen by a central bank printing press. You try desperately to save for a family home. You try to put away money for your children's higher education. You dream of a dignified, peaceful retirement. But the central planners keep moving the goalposts further and further into the distance. I need you to understand something very clearly. This is not an accident. Inflation is a meticulously designed feature of the modern fiat monetary system. It is not a bug. It is the exact mathematical mechanism by which corrupt, over-leveraged governments transfer the wealth of the middle class to the state apparatus in order to pay down their insurmountable, mathematically unpayable sovereign debt. Owning physical gold and physical silver is not a get-rich-quick scheme. It is not a lottery ticket. It is an act of profound financial rebellion. It is a powerful, undeniable statement that says to the central banks of the world, I see what you are doing. I understand your game, and I will absolutely not allow my labor, my time, and my family's future to be diluted by your printing press. When you hold a physical 1-ounce silver coin in the palm of your hand, you are holding a literal piece of the earth that has successfully maintained its purchasing power for thousands of years of human history. It survived the spectacular fall of the Roman Empire. It survived the devastating hyperinflation of the Weimar Republic. It survived the crushing blow of the 2008 Great Financial Crisis, and it will unequivocally survive the geopolitical chaos and monetary destruction of 2026. The emotional toll of living in a state of constant, grinding economic uncertainty is incredibly heavy. It causes bitter arguments in marriages, it breeds deep anxiety in our youth, and it strikes terror into the hearts of our elders who live on fixed incomes. But education, awareness, and decisive preparation are the ultimate antidotes to fear. By understanding this macroeconomic landscape, by seeing the trap clearly before the jaws snap shut, you take ultimate control of your family's financial destiny, navigating the coming storm. So, what do we actually do with this terrifying but empowering information? How do we specifically prepare for the violent shockwaves that are scheduled to hit the market starting next week? Refuse the volatility traps. Next week, I promise you, you will see wild, stomach-turning swings in the paper pricing markets. The algorithmic high-frequency trading bots deployed by Wall Street will try desperately to shake out weak, emotional hands based on minute-by-minute, sensationalized news headlines out of the Middle East or Washington, D.C. If the paper price of silver drops $1 on Tuesday, only to violently rip higher by $3 on Thursday, do not panic sell. You must understand that the paper derivative price is heavily managed, but the physical supply is tightening globally at an alarming rate. Monitor the ratio relentlessly. Keep your eyes glued to the gold to silver ratio. Currently sitting at 55-1, if we witness a sustained high-volume break below the 50-1 threshold, it will act as a massive global flare. It will signal to every institution on Earth that silver has entered a definitive, undeniable, historic bull market leadership phase. At that exact moment, the industrial panic buying will truly begin, and the $121 high we witnessed in January will look like nothing more than a minor speed bump on the way to dramatically higher valuations. Secure your physical holdings. While derivative products like the SPDR Gold Trust and iShares Silver are convenient for day trading, they carry massive hidden counterparty risks. In a true systemic banking shock, a paper claim on gold is absolutely not the same thing as physical possession. You must ensure that a significant portion of your hard-earned wealth is stored away in physical bullion, sovereign minted coins or standardized bars, held securely outside of the highly leveraged, fragile traditional banking system. See through the geopolitical theater. The mainstream corporate news cycle will attempt to pacify the general public with endless, soothing talk of tentative diplomatic deals and temporary ceasefire extensions. Always read between the lines. The undeniable reality is that the unipolar financial world is violently fracturing, and the global shift away from Western fiat financial hegemony is accelerating every single day. My friends, we are collectively living through a textbook historic wealth transfer. The transition from an illusionary, fiat, debt-based system back to a harsh, commodity-backed reality is always incredibly painful, intensely volatile, and deeply shocking to the masses who choose to remain unprepared. Next week, the critical data will hit the wire. The machines will react. The massive institutions will make their final chess moves. The only question that remains is this: where exactly will you be positioned when the music finally stops? Will you be desperately clinging to an evaporating illusion of paper wealth, or will your family be firmly anchored in the indestructible, historical reality of physical gold and silver? Thank you so much for being here with me today. I want to say it one more time. I love all of my subscribers for your incredible, unwavering support. We are actively building a global community of highly educated, deeply resilient, and forward-thinking individuals right here at Aurex, and I absolutely could not do this without each and every one of you. Please, hit that like button right now, leave a comment down below on exactly where you think the true physical silver price is heading by the end of 2026, and share this video with your family and friends immediately. The YouTube algorithm actively suppresses this kind of hard financial truth, so I rely entirely on you, my community, to get this critical message out to the people who need to hear it most. Stay strong, stay vigilant, stay prepared, and I will see you in the next critical market update. John A.G.,